This report brought to you by the Richmond Club, where investors and high-growth companies meet.
And our final speaker today is the CEO of Trilogy Metals, Rick van Nieuwenhuyse.
Thanks, everyone, for being here today. Pleasure for us to speak here, and I think I'd use this way. So I'm obviously going to be making a lot of forward-looking statements here, so just bear with me. We're going to talk about copper, and we're going to talk about cobalt and a few other metals. These are metals that are essential for the electric revolution that's taking place with the transition to electric vehicles, alternative energy, and battery storage. We heard a lot earlier today about the nanotech application for creating the lithium that goes in the batteries. The thing you really need to understand is that batteries don't work unless you've got copper to connect everything. So copper is an essential metal for this whole revolution to take place. We have a lot of copper, 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million ounces of precious metals in the gold equivalent precious metals, and 77 million pounds of cobalt, and we're still exploring and we're still expanding the resource. We're in Alaska, a safe rule of law jurisdiction with a low tax rate, one of the lowest in the world. We're focused on advancing two projects, our Arctic project, which is at a feasibility level. We're doing the feasibility now. Based on the pre-feasibility study, you can see why this is a special project. It's all about grade. Grade's king in our business. So 43 million tons of 5% copper equivalent. You can see the breakdown of the grades there, and I'll speak more to that as we go in the talk. Based on the pre-feasibility study economics, a post-tax NPV at an 8% discount rate of 1.4 billion and a 33% IRR. This is a real project. We don't need higher metal prices for this to be economic. We're also exploring the Bornite project. We've already have 6 billion pounds of copper outlined there and 77 million pounds of cobalt. And again, as I said, we're still exploring and still expanding the resources. Just quickly, we're traded both in Canada on the TSX, but we do most of our trading in the US on the New York Stock Exchange under the symbol TMQ. 131 million shares outstanding. $30 million in the bank. These are all U.S. numbers. And we have about $10 million of warrants that are deep in the money, and I expect that money to come in the next over the next month or two. We have a blue chip roster of shareholders, mostly New York, and a major company, which I'll speak to in South 32 as a partner, as a business partner. Management's well incentivized with 3% of the company. I personally bought $1.5 million worth of stock about a year ago. So we believe in this story. Now, as junior company can't develop a mining district by itself. So we're going to talk about three partners very quickly. We're partnered with an Alaska Native Corporation. They're called NANA. This part of the world, the economic engine here is the Red Dog mine. It's the second largest zinc mine in the world. It's been operating for 30 years. It's owned by NANA Regional Corporation, an Alaska Native Corporation. As I said, it's been in business for 30 years, so the economy of this region is based on mining. Taxes support the local borough government, the school district, and the individual village governments. The red circle there outlines the area of the Ambler mining district. So again, safe rule of law jurisdiction, low tax rate, and a great place to work, safe place to work. Our partner in developing the infrastructure, because we are located in the proverbial middle of nowhere, and so we partnered with the state of Alaska, a group called the Alaska Industrial Development Export Authority, or ADA for short, and they are in the middle of permitting a road that will access the Ambler Mining District and connect it to the rest of the existing infrastructure in the state of Alaska, which is the Dalton Highway. So our plan is to haul our concentrates. We'll be producing copper, zinc, and lead concentrates containing the precious metals, down to the city of Fairbanks, where we'll catch the Alaska Railroad that goes down to the existing port in Anchorage, where the port's all set up to handle the containers and drop the concentrates directly into the ship holds that would be bound for markets in Asia, smelter markets in Asia. That plan is underway. We've been in the permitting process for the road for about 5 years, and it comes to the end point this year. The draft EIS will be out in June, with a record of decision by the end of the year. And that's it's based on an accord, signed MOU between the state of Alaska and the federal government. It doesn't happen overnight, but it's happening now, and this is a huge catalyst for a share appreciation in the stock. The final partnership is with a major mining company. South 32 is their name. They were spun out of BHP a number of years ago. They are about the size of Teck, probably a little better cash flow than Teck. They generate about $1.3 billion in 2018. They dividended about $600 million to their shareholders, and so that means they have $600 million left to spend. We have an option agreement with them. It's a 3-year option. They pay us $10 million a year. They paid us their last tranche just about a month ago. We spend that exploring the project, and at the end of that option, which expires in January 2020, so not with less than a year away, they have to write a check for $150 million, again US dollars, or walk away from the project. They write the $150 million check, we form a 50-50 joint venture, and we continue to explore and develop this fantastic district as a joint venture partnership. So let's talk about the assets. This is the Ambler mining district. Arctic is at the center of this volcanogenic massive sulfide polymetallic belt of rocks, very, very prolific belt of rocks. We'll start with Arctic, and we'll talk about bornite in a little bit. This is the Arctic deposit. It sits on top of, just underneath the top of a mountain. It's an ideal place to develop a mine. You can see what makes this project special is the grades. For an open pit mine, these are spectacular grades. This will make a good underground mine. But again, this is going to be mined with an open pit. Over 2% copper, 3.2% zinc, 0.6 lead, half a gram of gold, and over an ounce of silver. The geometry of the deposit is such that it basically dips with the hill, so that's why it can be mined with an open pit. It's a highly folded series of massive sulfide lenses, and that's what makes this special, is again the grade. The economics here, you can see the companies that were involved. These are all first-tier engineering companies: Asenco, Amec Foster Wheeler, and SRK. We developed a 12-year mine life, mining 10,000 tons a day, producing 160 million pounds of copper a year, 200 million pounds of zinc, 30 million pounds of lead, 3 million ounces of silver, and 30,000 ounces of gold a year. You can see the metal prices we've used there for long-term metal price assumptions. They're pretty much consensus. $780 million of capital. That's a modest size amount of capital for the amount of metal that you're producing. You're producing copper for 15 cents a pound, taking into account the byproduct metals credits. On an all-in basis, and so including your initial capital, your sustaining capital, TCRCs and royalties, you're producing copper for 63 cents a pound. Copper today, I think, was $2.96 or so. So you can see the margin on this thing is astronomical. 1.4 billion post-tax NPV and a 33% IRR. Absolutely fantastic project economics. You're generating $450 million of free cash flow a year. So this thing is a cash flow machine, which means you can obviously pay your initial capital back in less than 2 years. Again, just a fantastic project. We're producing 3 concentrates, copper concentrates, averaging about between 29 and 30%. That's at the high end of the spectrum for copper concentrates. We don't expect any significant deleterious materials. The zinc concentrate, again at the high end of the concentrate ratio at about 59%, and the cadmium levels are below the levels that the smelters get worried about. And then the lead concentrate, it's kind of your average lead concentrate, but what makes it special is it's got most of the gold and the silver in it. So it's actually the most valuable concentrate, although it's the smallest amount of in terms of volume. Our plan is to complete the feasibility study. We're completely financed for this. We've got plenty of money in the bank. The critical path there is the program this year to do the geotechnical work and the hydrology work in the pit. So that work will be taking place here in June and July of this year, with the expected date for the feasibility study to be completed by February of 2020. Then we'll start then we'll start permitting for developing the mine. We expect this to be a 2-year process. The We only need one federal permit here, and if you're familiar with permitting in the United States, it's the federal government that tends to be the slowest. State governments tend to be a lot more expeditious about granting permits. So we have one permit that we need from the federal government. It's called a 404 permit, or a wetlands dredge and fill permit. We're going to be disturbing about 100 acres of wetlands, which is a de minimis amount of wetlands in the context of the vastness of Alaska. The rest of the permits we need are all issued by the state government with an oversight from the local borough government as well. This is a district. We're developing a whole district here. There are a number of historic resources that have been put together back in the 70s before the land claims were settled, which is why this project is still undeveloped. We own the majority of these. They're around 50 million tons of about 4% copper equivalent in these historic resources. So we'll be able to take that 12-year mine life and just continue it with continued exploration and development. Again, it's a district. That is, these similar districts around the world have been in operations for 75 to well over 100 years. That's Arctic. Concept is a central mill here, develop the rest of the district over time. And then we've got our second project here 20 miles away over at Bornite. This is our camp. It's a lovely place to work. We've developed 125 million tons of 1% in an open pit and 58 million tons of 3% in an underground. Those are very good economic grades. We've drilled 25 holes with our partner South 32's money over the last 2 years. We'll be updating the resource in a couple of weeks. And then we'll continue to expand and drill more holes like this. This is 16 meters of 5% copper, 0.2 cobalt. Again, this is just another stellar project. It's the neighbor. The existing resource here will be expanded with the resource update coming out here in another couple of weeks. Current program is a $9.2 million program plan for 2019, about 12 holes, and again funded by South 32. That's their final payment for, so that's their final period of the option. To get a 50% interest, they write a $150 million check. Here's the value proposition here. Our partner South 32 bought a company last year called Arizona Mining. A lot of people made a lot of money. We are the same grade and same tons as that project, and we're continuing to explore and add grade and add tons as we continue to explore the district. They were acquired. The size of the bubble here is the size of the market cap. They were acquired for $1.6 billion. We're currently a $200 million market cap company, US dollars. So we've got a lot of growth to do. We've got a lot of value to add here, and we look forward to your questions, and we hope that you become an investor and a shareholder. Thank you.
If you've enjoyed this video, please let us know. You've been watching the Richmond Club Report. If you've just come across this channel, please feel free to subscribe. I'm sure you'll find a lot of interesting and profitable investment ideas around here. We'll see you again soon on the next video. Cheers, guys. Have an amazing and profitable day.